Mr. Dimon, since the last time the federal government raised your bank's capital requirements in Dodd-Frank and otherwise, have you had a depositor run on your bank?
We have not.
Have you failed a stress test?
We have never failed a stress test, no.
Have you ever reached a point where your liabilities were greater than your assets?
Absolutely not.
Well, unfortunately, we've had 3 banks this year that did go broke. Mm-hmm. They're mid-sized banks. You know them: Signature, Silicon Valley, First Republic. We've held hearings. In my judgment, they went broke because their management did really stupid stuff. And because the FDIC and the regulators who were in charge of keeping them from doing stupid stuff sat there like bumps on a log, sucking on their teeth, and watched them do stupid stuff. And in many cases, had to turn to you to clean up the mess.
Today, we're diving into a pivotal Senate hearing where Senator Kennedy grilled JPMorgan's Jamie Dimon and Citigroup's Jane Fraser on FDIC scandals and recent bank failures. The hearing raised tough questions about accountability and regulatory oversight, issues that affect us all. Don't forget to subscribe for more crucial finance updates. This year, 3 major banks collapsed: Signature, Silicon Valley Bank, and First Republic. Senator Kennedy blamed stupid management, but regulators like the FDIC just watched it happen. Even worse, reports surfaced of FDIC employees abusing their positions. If this shocks you, subscribe for more breakdowns like this.
Mr. Dimon, don't you find it ironic? The FDIC is now turning to you and saying, you know our track record, which is blemished at the FDIC. Your bank isn't broken, but we're going to tell you how to fix it. Do you find that ironic? They're going to tell you how to fix it based on standards put together by bureaucrats in Basel, Switzerland, not by the United States Congress. Mm-hmm. Do you find it ironic that they're telling you this and proposing this? Isn't that kind of like being given gun safety advice by Alec Baldwin?
Should I answer the question? So the major risk of those banks was hiding in plain sight, which is interest rate exposure. That was known to most people who actually could read a balance sheet and read their financial statements, and that's true. I also think
the FDIC said they didn't know. They were busy doing whatever else they were doing at the at their Gomorrah of carnal abuse over there.
Yeah. I also do think you're making a good point that some of these rules were put in place, and some folks have mentioned here, are pushing business outside of the banking system. And to point out exactly what that is, it's almost 80% of the mortgage business today. It's half of the leveraged lending business today. And it's a bunch of other things which people don't actually see about the plumbing of the system.
Kennedy pointed out the irony. The FDIC, with its own failures, is telling major banks how to fix problems regulators missed. Jamie Dimon was asked if it's odd that the FDIC uses international rules from Basel, not U.S. Congress, to guide banks. It's like getting gun safety advice from someone who fired a shot in a crowded room. Hit subscribe to see how global rules and U.S. oversight shape your money.
How is this even legal under West Virginia v. EPA? You have bank regulators without clear direction from Congress who are borrowing standards from other regulators in Basel, Switzerland, imposing them on you without clear directive from Congress. It clearly falls under the major questions doctrine. Why doesn't this violate West Virginia versus EPA? You don't have to know a law book from an LL Bean catalog to see that.
Kennedy explained that regulations are pushing business outside traditional banks, into less transparent areas. Now, most mortgages and half of leveraged lending happen outside regular banks. It's like hidden cracks in a building's foundation, risks most people never see. There's a big legal question. Are regulators overstepping their authority? Kennedy raised concerns about agencies like the FDIC enforcing rules without clear approval from Congress.
Why doesn't it violate the law? Anybody.
Senator Kennedy's time has expired. Senator Warren from Virginia.
Ms. Fraser was about to answer.
Would you like to answer, Ms. Fraser? I thought you gave her time. Proceed, please.
I think we very much appreciate your points of view, Senator, on this topic, and I think many of us would concur. While violations of law, we hope, are things that we will debate as a last resort. We would be prepared to do so because it's important that there's clarity in the law and that we abide by it.
If true, courts may have to step in. For updates, hit subscribe. What does all this mean for us? Bank failures aren't just headlines, they impact jobs, savings, and the economy. There's a clear need for accountability and smarter oversight. Will regulators step up, or will banks keep cleaning up their mess? Thanks for watching.